Hello D-traders! The new trading week has kicked off. As usual, we have prepared a recap of the Asian session for you. And today we are going to discuss the reasons for a weaker yen, the main drivers of the US dollar and the target levels of the Aussie. Let's get cracking. And that's all for now. This week news on the war in the Ukraine. At the Friday's close, the US stock market rose slightly. Traders also digested the results of the Nonfarm Payrolls report for March, revealed on Friday. The figure turned out to be lower than expected. The economy added 426,000 versus the forecast reading of 480,000. However, after the upward revision by 80,000 for February, the indicator grew to 739,000 from 654,000. Therefore, the non-farm payrolls figure is more or less in line with the forecasts. A weak rise in the equity market is also associated with the growing US Treasuries. The government bond yields reached a three-year high of 2.49%. As a result, the inverted curve has flattened even more. It occurs when longer-term bonds have a lower yield than short-term debt instrument. To this end, the Fed has plenty of reasons to hike the key rate by 50 basis points amid a strong labor market, high inflation and the inverted yield curve. So, investors are not surprised that the US dollar has been growing for two consecutive sessions. It has been rising steadily thanks to upbeat and non-farm payrolls data, the situation in the bond market and expectations of a rate increase. Its growth is also facilitated by geopolitical woes and a weakening euro. During the Asian session, the US dollar index went up above 98.50. In the early morning, it was trading at 98.66. Analysts believe that the greenback is unlikely to decline from these levels. Time will show whether they forecasts are accurate or not. The US dollar has started the trading week in the range of 98.52 and 98.66. While the US dollar is gaining momentum amid positive fundamental factors, the yen is losing steam due to the same factors. The main reason for its decrease is the current approach of the Bank of Japan's to monetary policy. The watchdog maintains the key rate at a low level as the weaker yen is more beneficial for the economy. Moreover, Haruhiko Kuroda, who has been the Bank of Japan governor for 9 years, has always used this approach. He creates conditions for a weaker yen, and he seems to have succeeded. After stabilizing last week, the yen fell below 122 again. In the Asian session, the dollar-yen pair was trading at 122.57. Many FX strategists draw attention to the 130 level, and the quotes are unlikely to approach it. Like Japanese officials, they are voicing concerns about a sharp decline in the yen. They are afraid of a higher import and consumer prices. However, the current exchange rate of the US dollar against the yen is still much lower than the crucial level. The pair is consolidating between the support level of 122.25 and the resistance level of 122.80. The Australian dollar was trading steadily against the greenback ahead of the Reserve Bank of Australia meeting on Tuesday. At that moment, it was consolidating at 0.7510. Moreover, the 0.7500 level will remain a very important one for the Aussie, as it has recently acted as both support and resistance. Yet the political events in Australia are rather bearish for the Aussie. The upcoming federal election and the likelihood of a hawkish stance by the Reserve Bank of Australia may push it lower. Reserve Bank of Australia Governor Philip Lowe would prefer to keep the monetary policy unchanged. However, the delay in the key rate decision may also undermine undermined the Australian dollar. Besides, the Aussie has lost its main driver, high oil prices. They also tumbled. So last week, oil fell by 13%, logging the biggest weekly decline in 2 years. In the Asian session, the AUD USD pair went down to the level of 0.7522. Apart from that, trading floors in China are closed today on the occasion of the Qingming festival. This is why the pair is consolidating within the range of 0.7484 and 0.7524. There is a great chance that it may climb higher. And that's all for now. This week, news on geopolitical tensions and central banks' plans to tighten monetary policy will be in the limelight. The Fed and the ECB have already published their meeting minutes. The Reserve Bank of Australia will hold a meeting this week. Keep abreast of the latest market news with the InstaForex TV channel and don't miss our next video review. See you soon!